The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Tom O'Brien and Steve Rhodes.
Good morning, folks. So you got half of the team here. Actually, got 2/3 of the team. In a few minutes, we'll be joined by Daryl Martin with Nadex, folks. And if you haven't test drove the Nadex platform, go to the homepage at TFNN.com. Over on the right-hand side, you'll see a Nadex banner. Takes you about the whole 4 minutes or so to sign up for a free account. They'll put a $25,000 deposit in your account. Now, you don't get that every day. Now, it's not real money. It's kind of like the euro out there, but they'll still put it in your account out there, and you can try the Nadex platform. I'm sure we're going to take a look at a couple possible trade setups with our man Daryl Martin. Now, before we go to Daryl, let's take a look at the markets out here. You got the Dow up 199 points, up 1 0.6%. The S&P's up 23 points. Composite up 56. Small caps up 14. Microsoft's up 14 cents. Apple's up $8 and change. Leading things dollar-wise on the upside. Priceline up 2% this morning, up $14. Google up $11. That's up almost 2% as well. Apple's up 1.5%. We'll see if there's any volume inside Apple. VMware up 7%. F5 Networks up 6%. ServiceNow, NOW, the ticker symbol. I keep moving here, up 29%. So what is the, looks like, ServiceNow price is IPO. Okay, so it's an IPO. We'll just pass on that. Nike is getting schniked. Down $10, down 10%. I want to take a look at that certainly during the show today. I want to see what kind of volume is coming out with that. You got Tronox Limited off 5%. You've got the gold. Let's see, gold trading up $47. Silver up $1.17. Light sweet crude up $4 this morning. The dollar, U.S. dollar index pulling back big, down to $1.33. Over in Europe, up 4%. Over in Germany, that's 244 points. The FTSE sort of joining on the party. They're up 2%. Not like the party, not like the Oktoberfest in June that they're having over in Germany. The Nikkei finished up 1.5% out at 132 points. You had the Hang Seng up 416 points. That was 2% last night, a little over 2%. The Shanghai up 1 3/10%, up 31 points. So we're going to first start off by taking a look at the Dow and see what the Dow is doing. The lines that are going to be drawn in the sand today are the resistance that these markets are running into. In the case of the Dow, all you're doing is looking at a descending tops line. We're just simply starting with Mayday on the index, on the actual Dow index. The high out there being 13,338.66. And the next area where you would draw your trend line on the descending tops would be the May 19th area. That would be out at 12,898. Then you could, from there, you can see right now today, that is what the Dow is running right into that trend line. Let's go do this for the S&P 500. So this way, you guys following along at home, you can draw your lines in the sand. You'll be able to make trading decisions based on it. So I'm going to get rid of some of the stuff that I've got here on the charts. And we're going to start with the same area on the S&P. We're going to go, actually, we could probably draw two of these trend lines. We're going to start right here with the easy one. That's going back to the May 1st time frame. May 1st high is 14.1532. That's the top of your trend line. Then it's going to hit the next two trading sessions on June 19th and June the 20th. And so that is the top of your trend line. You can see the S&P, coming into that. Certainly yesterday. Now, yesterday's candle is not a hammer candle. Looks like a hammer. Smells like a hammer, but it is not a hammer. But it is a candle where you can see that the bulls certainly stepped in at the end of the day and pushed the market higher. So you're trading into that downtrend line, and if you get a close above it, so you've had conviction today, but all you're doing is really testing an area of resistance out there. Now, you'll want to be paying attention to the volume, that goes on inside the markets, but that is your trend line in the S&P. If we go take a look at the same trend line, let's go take a look at it in the Russell 2000. If I have that up here, yeah. So let's take a look at the Russell 2000. Now, the Russell 2000 being stronger. Now, the Russell 2000, we're going to go take a look at the trend line going back to the highs on March 27th when it put the highs in out here. So that price point, folks, is going to be a high of 847.92. The price point that we're going to use here is then going to be the May 1st area. So you can see the Russell 2000 certainly be not anywhere near that area. That's going to be the real resistance on the Russell. If we go ahead and if we take the trend line and treat this the same as we did the Dow and the SPYs trend line and start from May 1st, you can see that the Russell 2000 is gapping above that same type of trend line. For me, it's more clear by taking a look at the Russell 2000. Its real trend line is descending tops line is going back to that March 27th high out there. Let's finish this thing off for you. Let's take a look at the composite, see what the composite is doing. And what we're going to do here is get rid of some of the other patterns that are out there. There we go. And in the case of the composite, let's start with May 1st first. So the high out there on May 1st is 3,085, and we're going to come down to the next area, which is going to be the top on June 20th, the high there, 2942. So you can see the composite, all the indexes really doing the same thing, running into a area of resistance. And you want to pay attention to the markets. In fact, let's just quickly go over to the world market, see what we have going on here. You can see the Shanghai finishing at its highs. Right now you've got Spain up at its highs of the trading session. The Nikkei basically finishing out at its highs. The Nikkei completing an A to B equals CD up with volume, not completing it, but taking out the B point this morning. You can see you had the Hang Seng finishing up near its highs. The DAX trading up near its highs as well, and the same with the FTSE. What does that say? It says in the U.S. we should also trade and close up near our highs. So that should help you with regard to any trading plan that you have for the day. And if we don't, folks, if the U.S. market sells off going into the close based on what else is going on around the world, based on the Kool-Aid that everybody is drinking at the same time, that will be sending you some kind of a signal out there. If we take a look at, let's go take a look at the ETF indexes. We've been trading for 45 minutes, so let's get some type of feel for volume out here. So we'll go ahead and start here with the Qs. 11 million shares. 11 million shares, that probably equates to about a 50 million share day. That 50 million share day going into the 42 million share downdraft from June 21st. Yesterday, it does 50 million shares as well. That's just the quick Steve-O math. That's not the same kind of math that you might want to do at home. Of course, you want to check back in after you have more than 45 minutes of trading. If we take a look at the small caps, the IWM doing 14 million shares, that says maybe about 60, 70 million shares. So if we take a look at the swing points that the small caps are taking on, really what I'd be looking at is, so you get several that you can look at. So let's take a look at the most recent swing point, 7908. Make sure. So you got 7908 twice as the high. On June 19th, that had 66 million shares, so that's the one that you would use. And today it has gotten up over that. So that high going to be important here on the small caps. 7908 is what you're going to want to watch. What the small caps actually did so far this morning, they had the 7907. So a point away. 14 million shares, as I said right now. To me, that was like a 60, 70 million share day. That is, so you're coming into that swing point with similar volume. So you're going to want to watch the small caps. Small caps also, though, really running into the downdraft April 10th. That has 101 million shares. It's also running into the downdraft from May 4th. And May 4th was really where I was expecting the markets on the indices to bounce to. So you got 75 million shares. The low there is 78.94. So be paying attention to those areas on the ETF structures. And coming into today's Tom show, filling in for Tom today, you're going to see Ken Shreve and Kate Stalter. I don't recall which is doing the first and which is doing the second show, but you'll want to be paying attention, in my opinion, to the small caps out there. Let's take a look at the diamonds and the volume that we have out here. Diamonds today so far in the first 46 minutes of trading doing 1.2 million shares. The diamonds trying to get into the swing point of June 19th. that has 3.8 million shares. So volume-wise, there's no problem. But really, the volume bar, the downdraft of 7 million shares on June 21st, that's really what it is going against. So what you've done is 1.2 million shares. That says you're going to do probably about 6 million shares today. That's 6 million going against that downdraft of 7.7 million shares. So the Dow, the diamond, is going to need to get some real juice into it. If we just kind of take a tour, all stocks are green. So everything is green inside the Dow 30 stocks. If we switch over to the IBD 50, of course, a couple of these stocks may have fallen out of the IBD 50. The only one that is trading down right now is Family Dollar Store. They are down 73 cents right now, kind of unusual. And leading the charge on the way up dollar-wise is Priceline, followed by Apple, MasterCard, and TransDigm. If we go take a look at the dollar index out there, U.S. dollar index for you, U.S. dollar index pulling back hard, making a bearish engulfing extraordinary. So far it has engulfed 1, 2, 3, 4, 5, 6 trading sessions, and on its way to really it looks like to me then the U.S. dollar index here setting up an A to B equals CD down. So let's go take a look at that possible pattern setup. The A to B equals CD down, folks, starts at the June 1st high out at $83.67. That's your A point. Your B point is down here at June 19th, down at 81.39. Your C point is yesterday as it makes a high up at the 83.07 mark. So your 1-to-1 A to B equals CD is going to take you to 80.79. Now what you're looking for here is you're looking for a Gartley buy pattern. That Gartley buy pattern, certainly the way that Gartley wrote about it in his book, so the Gartley 222, he just simply was looking for an A to B equals CD. It's with further technology. He wasn't using Fibonacci expansion and retracements. We've added that just simply by paying attention to markets and knowing that markets simply seem to pull back into those sweet 618 or 0.786 areas. So if we go from the swing point low of the last swing point low that we would use out here would be the May 1st day. So we're using May 1st a lot. And the low on that was 78.67. So what you are seeing is at that 0.618 area on the U.S. dollar index, that's $80.58. And at 80.79, you've got a 1-to-1 A to B equals CD. Of course, how you come into that D point will tell you whether or not it's going to be a 0.618 Gartley buy or whether you're looking at more likely at a 0.786 Gartley buy. Now, the swing point that the U.S. dollar index is coming into, it's coming in there with volume. So you have 28,000 shares on June 19th, and you've already done 26,000 shares, and you are inside that swing point right now. So expect the low of that swing point to be tested. If we take a look at gold here, take a look at how gold is popping. You've got gold trading up right now, $48. Gold is on its way first to the 1606 area, and then next about the 1631 mark. Dow up 219, S&P's up 25. When we get back, we're going to go take a look at a couple of stocks, and then we're going to Daryl Martin. We're going to take a look at the Nadex platform, folks. We'll be right back.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. We got the Dow up 222, S&P's up 26, and going to look at the ETF DBA for our man Jack. And now, folks, if you trade, this is an ETF that is dealing with the some of the grains out there. In fact, the ETF itself has actually changed over time. And so when you change these when you trade these ETFs, folks, what you want to make sure that you do is you understand what the underlying instruments are. In this case here, and especially the index weighting, because it has such an impact on your ability to be able to trade this. And what you can do is, in this case here, this is for the Power Shares. So you can go to the Power Shares website. And as of June 28th, so as of yesterday, this tells you exactly what the weighting is, exactly what contracts they are taking a look at. So you can see it's got feeder cattle with the August expiration date. That's 4% of the weighting in there. You've got cocoa with a contract expiration of September 13th. That's almost a 10% weighting inside there. You've got coffee. That's an 8% weighting. So corn is corn is not the largest weighting. Corn is 14% of the ETF. Live cattle, 12.5%. Soybeans, 15%. Now that soybean contract going out to November. Sugar is June 28th. So you have to really be paying attention. It's got wheat, and it's using the Kansas wheat. That's 6% out there. So you really want to make sure that you understand the underlying instrument. It's like trading the UNG, which is one of the natural gas ETFs. You really need to understand what's going on inside the natural gas contract in order to be able to trade this properly. And what you can do here is just take, in this case here, inside the DBA, you would want to make sure that you have the top four or five contracts. And if you don't have access to the contracts, you don't have the underlying instrument, then you shouldn't be trading it, because you need to be paying attention to exactly what's going on inside there in order to be able to make your best decision. Now, what I can tell you, and I'm not going to be able to take up the time on this show because we're going to spend the time with Daryl Martin taking a look at Nadex, but when you do take a look at just simply DBA, if you didn't have to worry about the underlying instruments, it's made a 1 to 1.618 A to B equal 1 to 2 A to B equals CD up at the $27.96. Now, oftentimes, if you have one of Tom's books, he'll tell you that when you do a 1 to 2 A to B equals CD, oftentimes that is going to be an automatic reversal point. So you've hit that today. And it's traded out at 2103. What I would do, assuming that you are long inside this trade, you wouldn't want to get in it now, that's for sure. But if you are long inside this trade here, and one option that you could do is you could use a trailing stop if you'd like, or you could take all your profit. Not a bad time, really, to take all your profit. But if you wanted to use a trailing stop, what I did with the tool that is available to each of you on the homepage of TFNN.com, just look over on the left-hand side, you'll see position size calculator. I just simply typed in the symbol DBA, and what I can tell you is the average daily volatility in this. This includes gap ups, which you see symbol labeled here with GU. So this has had nothing but gap ups. So this includes gap ups. The average daily trading range is 34 cents. So at 34 cents, what you'd want to do is multiply that probably times 1.272 or 1.618. If you multiply times 1.618, I'd put a 56-cent trailing stop up above quite frankly, up above where it's trading right now, out at 28.05. So hopefully that helps Jack out in the Tiger's Den. And folks, if you haven't tried the Tiger's Den, please go to the homepage of TFNN.com. Just simply a fantastic group of people that can help to educate you, help to answer questions. We certainly rely on them, and it'll help you to change your peer group. And let's go add to my peer group. Let's go to Daryl Martin. Daryl, thanks for holding. Just with the markets doing what they're doing today, I know our listeners just need to, and they want to know what's kind of going on and where the markets are trading and why. So thanks so much for holding. I appreciate it.
Oh, no, it's been great. I've been watching, listening, and learning myself.
Okay, good. So Daryl is our resident expert with Nadex, folks. And again, you can try the Nadex platform. Just go to the homepage of TFNN.com. What you will see there is over on the right-hand side, you'll see this little blue banner says Nadex. In fact, as long as you're over there, make sure you've bookmarked Tiger TV on your mobile device, iPhone, iPad. And in fact, Nadex has a mobile platform as well. So click on that, and what that's going to do is that's going to let you set up a trading account. You'll have $25,000. That's what I've got up on my screen here right now. And when we come back from break, Daryl, is there anything specific trade-wise that you're looking at here so far this morning?
Really, I mean, it's all the markets are at the highs right now.
Yeah.
And, with the volume, I'm really looking at a potential short on the market right now.
Okay, perfect. So when we get back, we're going to go back to Daryl Martin. We're going to take a look at Nadex. If you got a question about the Nadex platform, folks, give me a call. We'd absolutely love to hear from you. 877-927-6648. Dow's up 220. S&P's up 26. We'll be right back, folks.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these
these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars before Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as you normally do with Tiger Dollars, but with this one-of-a-kind offer, you get over $1,000 in added value completely free. Each 90-minute live webinar usually sells for $149, and you get all 7 of them absolutely free. Tom O'Brien, Steve Rhodes, Basil Chapman, Larry Pesavento, Ken Shreve, Dave White, and Kate Stalter. You get all 7 classes completely free. Whether you're an experienced trader or you're completely new to the markets, this sale is perfect for all levels of investors. Don't miss out on our best Tiger Dollar sale ever. Visit the front page of TFNN.com today and purchase your Tiger Dollars before June 24th. Don't wait and risk missing out on this one-of-a-kind offer. Act now. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Got the Dow up 212 right now. And just before we go back to Daryl, Nike trading out at 86.95. Nike, today is going to be the end of the month here, and Nike is going into long-term bearish mode right now with today's trading. And last time that Nike was in long-term bearish mode gave us the signal. Now, this, folks, is the signal. This is a special report that I put together. It's available to you on the homepage. It says special reports out there. Tells you when to be in and when to be out of the market for sure when it comes to your long-term holdings out there. So go check that out. I've also done a special show for July 4th, already pre-recorded, The two shows for July 4th on Tom's shows out there, you're going to want to absolutely catch those shows. Even though the market will be closed there, the education and information that will be shared there, you want to mark that down on your candle. You can mark it down on a candle if you want, but on your calendar, even though you'll be eating burgers and steaks and lobster and all the and potato salad and you name it, those shows are going to be archived on Channel 5 as well. So either catch it live or catch the archive of those shows. But Nike is trading down, and unfortunately Nike has volume down in October of 2008. Let's go back to Daryl Martin, and Daryl is our resident expert on the Nadex platform. And so I was, during the break here, Daryl, I was surfing around trying to find a possible trade for us. I came up with one. And folks, what I'm looking at here is now I put on the ultra short-term time frames out here because the market is always continuously breathing in A to B equals CD patterns. And so what I came up with was the Great British Pound US dollar currency pair. Now, what I've got up here is the 5-minute chart. Now, as it completed so I'll teach you something here, folks. Absolutely. So this is no charge for this. So as it completes a 1.272 Gartley butterfly cell pattern, what you had occur in the 5 minutes while I was surfing around, which was between 10 and 10:35, I found a bearish engulfing. Now, what I'm looking for right now, it closed out at 1.5698. And so 4 minutes from now at 10:40, if this closes below where's my close? 1.5688. Better write that down. So 1.5688. Then what that is setting up a pullback just on the 5-minute chart. So we're going to go take a look at what that pullback would be. And that pullback that I would want to be looking. So hopefully you're scouring for that trade there. If we're going to trade the pound against the dollar. So the first pullback that I would be expecting would be at 1.5654. The ultimate is going to pull it back to the 0.618 area, 1.5623. And we're, at this stage, we're getting follow through. So that's the trade right now. If I were trading intraday, well, first, if I were not doing the show, I would be trading this pattern intraday and just trading the currency pair. But folks, when you take a look at Nadex really allows you to really have a very, very defined risk on a trade. So it's a great way to be able to trade. It's a great way to be able to use these patterns here, and then go use the Nadex platform maybe before you actually start the currency pair. But this is an ideal trade. So it's an ideal trade here, and we're going to see either a 0.382 for sure pullback, or more likely the 1.618. So I'd be putting it on right now. Because even though I ordinarily would wait 2 minutes just for the confirmation. So, Daryl, I'll pull up the Nadex platform. Is there a trade out there that Nadex has that would, somewhat meet the parameters here that we've identified?
Oh, yeah, there's several right here.
Okay.
How long do you think it'll take for it to make that move back?
Oh, I don't know, but can we close it out once it makes that move back?
Oh, yeah, definitely.
Okay, so see, it wouldn't really, so I would just, I just kind of weigh the premium time on it. I don't,
Exactly,
I don't know the time. I just know that it will pull back there.
Okay. Well, looking at intraday, we have a few different options. We have a very short-term option with an incredibly low risk. That's only like 20 minutes, though. That has like a $5 risk on it.
What does it have to get to, though? Yeah,
that one actually can make a $141 potential profit.
Yeah. Let's look at the longer.
Let's look at 81 minutes. We have a $10 risk, which is great. You get a lot more time for $5 more there. Okay, so am I going to click on the navigation area? I'm going to click on commodities. I'm sorry. Where am I going to? Forex. So Forex bull spreads. Is that what I'm clicking on? Exactly. You got Forex bull spreads.
Got it. Okay, and so we got the where is it? Great British Pound, US dollar. And folks, it only took me like about 2 minutes to find that trade. So market is always making those patterns A to B equals CD. All right, and then time frame I'm going to choose is what, 9 to 11 or the daily? What am I?
Looking at the different options, we could choose. I got the $10 one. If we want to do that, I get out, a little over an hour and a half to make the move.
Okay, so that's
pretty on spot for a Friday.
9. So that would be which one would I choose?
That'd be the 12 o'clock expiration.
Got it. Okay. All right. Order ticket. There, Pull up my order ticket. Okay, and so I would be going short here. So my direction is sell. All right, so I'm selling the pound against the.
And make sure you're selling the 5540 to 5690.
I don't know. Which was the, I wasn't actually, tell me which one I should choose. I gave you the numbers, and it's more difficult for me to go back and forth on the screen here. I guess
no problem. Yeah, just hop on and under pound dollar, so close that one down.
Okay.
And then under the 10 to 12 option, choose the bottom one.
Bottom one, okay, great. Order ticket. All right, hit sell. And size. Now, how many contracts equal, how many Nadex contracts equal one contract in the currency?
The Nadex FX contracts actually mirror the FX spot market.
Okay.
And so every single Nadex contract for the dollar-based pairs like pound dollar, euro dollar, Aussie dollar,
great.
All of those is one contract for one mini lot. So 10,000.
10,000. Okay. Right. Okay. So we would do basically 100 here. Okay. And
then doing the million units of currency. Yep.
Okay. Yep. Okay. And so then price-wise, I just click on it and it automatically fills that in. Is that, or no? I'm supposed to click up top. Is that right?
Yeah. If you click the sell price up top, it'll fill it in for you. Yep.
Got it. Okay. And so in this case here, I'm risking 1,000 to make 14,000.
There you go.
Okay. So that trade is on, folks, and. Now, so during this trade here, I'm able to manage it if I want and take some profits down along the way. Is that correct?
Exactly. So you could basically tear that off because you had a couple different levels you were going for.
Yes.
And you can actually go in right now, click on the green arrow there on your open position.
Right here? Right here? Yep.
If you look at the open position tab there, right next to your order, click that green arrow. It'll create a ticket in the opposite direction. So now what you want to do is, let's say if you want to take off half.
Okay.
So go ahead and open that up, and then put in, say, would you do 100?
I did 100.
So put it change your quantity to 50.
Okay.
Yeah, leave it at buy because you sold them. So.
Yep.
And then change the quantity to 50.
Yeah.
And then go in and
so I've got
the first target you had, go ahead and put in that take profit price.
Got it. Okay. So the first target that we have on this, I don't like that. That didn't confirm the bearish golfing. Gosh darn you. So that's why that's too bad. So, folks, on that 1040 candle out here, what I was looking for was really a confirmation to close below. We didn't get that. So just telling you how I would trade these things. Now we're going to, the trade is on, so don't worry, not worrying about it. But how I would trade this, folks, is I like to wait for a second opinion. It's my money, and when I have my money on the line, I love getting second opinions. Just like when you go to a doctor here. So we didn't get it, so I would have held off on this trade. But I will tell you, it doesn't mean that the trade won't work.
Well, even with that trade right there, if you look at it, you risk $10 per spread.
Right.
Okay? The thing can go all the way up as far as it wants to.
Right.
But again, one of the great things is your maximum risk is $10. No matter how far up it goes, before expiration, if it comes back down to where you sold it, you'll profit. So, or below where you sold it, you can profit.
Right.
So you have time to be right, whereas normally you would not have that time to be right, and you wouldn't have that capped risk like you do at the spread. You only have a $10 risk per spread on that trade.
No, look, absolutely. I get that. What I actually like about the platform here is first, it really does allow individuals to, especially because you can take some of the trade off here, with profit. It really does allow people to easily go ahead and trade the Forex here. Because unfortunately we have some, unfortunately we've been around enough to know that there are folks out there that something happens, they get tied up, a phone rings, and they're not using the tools where at the same time that they're placing the trade, that they're also placing the stop out there. Which is a nice thing about being able to put in an advanced order. So that you have
take profit order.
Yeah.
And with the position you have right now, let's say you change directions and you want to go long now.
Right.
Okay? You could go in and you could buy the underlying FX market, the spot market.
Right.
And now you have a $14,000 hedge.
Right.
Because if it starts dropping down, and you went long, then the spread will be making money while your FX is losing money. But if it goes up, then it doesn't have to go that far. Basically that's 10 ticks or so, and you're actually making profit on the FX trade. So you could change directions right now.
Right.
And now you have this massive stop loss on that can cover your losses on the downside.
Right. Okay. Well, look, let's just still go with the butterfly pattern that we've got out here, and it looks like at about 156.5. So 156.5 is the area where I would go ahead and take my first portion of profit. So I'm going to go back to that as soon as I can find it. Nadex, okay. So we had half, and I just simply put in the price to 1.565. And then we're all set, right?
Yep. And then the other ones, now you can let them just ride it all the way down. Hopefully they'll keep going.
Okay.
But, you definitely taken profit. You've covered your risk. And that's something else you may do is you may go, you know what? How much would it take to cover my risk? And so a lot of times if you're in a larger position or even any, multiple quantity position, you go, okay, my total risk in this position is, you're doing quite a few hundred contracts, $1,000.
Right.
So how many can I sell at what price point to remove my $1,000 risk? So maybe you don't get the full retracement. Maybe you just get 10, 20, 30 tick move.
Right.
You can go in there and you can put in, say, 25 contracts to cover that or whatever. And by doing that, you can actually cover your risk with part of your position. The other one has your profit goal, but you have no risk at this point because you've taken off the risk by, having profits. I mean, now you're risking profits, but you're not risking your original risk capital.
Absolutely.
And then you tear down your stops. So, I mean, it really is a good, money management thing is remove the initial risk from the trade as soon as possible and then allow your profits to run.
Right. Okay. Well, look, this is good. And what this also allows folks to do, really, and especially because they can do it with their paper trading account. You can have multiple screens up. I'm just trying to keep everything on Tiger TV on one screen out here. And, what I like to be able to teach people to do is to buy and sell the D point. That's in become an expert of this C to D leg, and really be able to trade butterfly patterns, Gartley patterns that are out there. And so this is really a great way to be able to do it. And what's nice about this is you can do it on, let's just say, a 5-minute chart, because these patterns, folks, they repeat themselves on a continuous, ongoing basis. And you also get the opportunity to see what happens when they fail. See, what I can tell you, Daryl, is that if this pattern here fails, where this will trade up to is going to be the 1.5740. So, as you said, this gives you the option here, if we start to see this thing fail, this also gives you the option to go the other way on the trade.
Yeah, one of the things I did yesterday, I was trading the health news announcement.
Yes.
And I went in, and I shorted the S&P, and I shorted several futures contracts, and I bought, the spreads to hedge it.
Yes.
But just in case it came out, I expected the market to drop on the initial announcement.
Yes.
But just in case it did go up, because who knows what was going to come out of that room.
Right.
I went in and actually bought just a few spreads.
Yes.
I bought 3 spreads long, and it's basically a hedge to my hedge. So that way, if the market shot up, it would cover my risk. And it worked out really well. What happened was the market dropped down. I took off profit, kept throwing it down, took off my other profit, basically stayed right there at its low. And then the hedge that I had on initially, the market went back up, as you know, at the end of the day yesterday.
Absolutely.
And it actually closed out actually a little bit above where I put the hedge on. So my long trade, made money, and then my short trade made money, and it just went well all the way around.
Oh, that's really great.
Even right now, you could go, you know what, if it does start shooting up, what do I want to do? And you could actually buy a few spreads to hedge your current trade.
Yeah. Wow, that's great. That's very great. So so I came up with a quick currency trade for folks to take a look at. Anything else that maybe you're looking at right now that might be setting up? I know you had mentioned you were taking a look at maybe the S&P futures contract. When I quickly looked over that from a daily, from an intraday standpoint, I don't recall seeing visually. I didn't spot a real quick pattern out there.
On this one, I wasn't actually pointing so much of a pattern as just looking at. I was looking at the dawn, the death of market.
Yeah.
And I was looking at the high of the day, and I'm like, I think we're about to do a reversal. So we said right before the last commercial break.
Okay.
And went short the market.
Okay.
And it's been dropping ever since.
Okay.
Basically, there's no more good news coming out.
You mean, Daryl? Wait, our fans want to know. You control the market? They love it.
Hey, I got my secrets.
I love it. Okay. We like that.
But I was looking over the U.S. 500 spreads.
Yep.
And it's checking those out, and there's a lot of opportunities right now, especially on the short side because it ran up so fast. And I went in and I was just looking at the end of day ones there, and you can go in and sort of pick your trade.
Yes.
But there's ones that are risking $50, $100 per trade on there.
Yes.
Per spread.
Yes.
And what I like to do, my favorite trade, and we'll be talking about this more when we have my show coming up regularly, is I love to hedge because the risk is so small. Yesterday per S&P futures contract I put on by hedging with the Nadex spread, I was only risking $60 total on the position.
Oh, that's great.
So, I had a full S&P future contract on and basically was risking 1 point. And, I had a 10-point stop loss.
Folks, this is Steve Rhodes and Daryl Martin, the Nadex Trading Hour. Dow is up 209. S&P's up 24. Composite up 61. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back to the Nadex Trading Hour, folks. Dow is up 208, S&P's up 23. As we take a look, you got 30 minutes here before Europe closes. You've got the DAX up 3.7%. Let's just take a quick peek, see if everything is up towards the top of its session. Okay, so you got the DAX backing off a bit out here. Let's take a look at the intraday chart here. Well, let's Got to refresh this screen, that's for sure. So you got the DAX trading off just a bit here. The FTSE is up 1 8/10%. That's up 100 points. Okay, my intraday data feed is, there we go. I don't see anything there. Anything really surprising there. Let's go back to Daryl. So Daryl, so you were saying you were putting on a short trade on the market. Why don't you tell our folks what you did, and actually maybe just walk me through it, just so they can follow along. And you can always catch the archive of this show again, folks, on channel 10. So that way, as they're doing the platform, using the platform here, they'll be able to follow along. And looks like you've got 3 minutes to go, my friend. So.
Okay. What I did was I went ahead and I went short the S&P up at 1350.
Okay, so what they first do is they go over to the navigate side. In this case here, they would be choosing an indices bull spread button, right?
Exactly. Now, I did do a hedge trade.
Okay.
So what I did is I went short the S&P futures market.
Yep.
And I shorted it at 1350.
Yep.
And then to hedge the trade, which I do, I always put my hedge on first.
Yeah.
So to hedge the trade, I went over to the US 500.
Got it.
And I went down, actually did the 11 a.m. one for this one.
Okay. Yeah.
And on the 11 a.m. one, I bought 5, because basically 5 of them makes it where every point equals $50, like on a future contract.
Yep.
I bought 5 of the 1350 to 1360s.
Okay.
And I bought them at 1351.8. So my difference is really my risk, at 1.8. So really that's, not even $100 risk on the trade.
Yeah.
Okay.
So when I go over when I go over and hit that right now, the order ticket thing is not up. So what was I?
Yeah, because it's already dropped so far down that there's no value left in that ticket.
Got it. Okay, cool.
Exactly. So now that trade's already on. Here in a few minutes, that trade's going to expire out. Okay.
Okay. So this one was showing 1 p.m. I think, wasn't it? Or maybe I grabbed the wrong one. That's all.
Yeah, the 11A one is going to expire here in 4 minutes. But I already locked. I basically had my profit. Now I'm just trailing my stop down on the trade.
Okay, great.
And I had a very small risk. I've already made back that risk, and now I'm just basically going short the market, and I'm riding it down. But what was great is I was able to get in, 30, 40 minutes ago with only, $100 risk on a trade, but I had a $500 stop loss.
Right.
So the market really could, have surged up, and I would only would have risked $100, so I had time to be right. Just in case, because when you're picking that top of the market, you got to be careful, and Nadex lets you be careful because it manages your risk for you.
Oh, that's really great. And Daryl, you're going to be hosting a show here after the July 4th holiday, right? So
yeah, exactly. I think we're starting up somewhere around July 9th, and I'll be hosting 5 days a week.
Oh, that's great. So we're looking forward to that. And folks, Daryl, thanks so much for joining us. I'm just going to wrap things up here for the folks before we go off to Basil Chapman for the day. And Daryl, have a great weekend.
You too.
All right. So, folks, you got the Dow up 207 points right now. What I'm going to do here is go ahead and go over to the indexes real quickly. And you know what each of the indexes are doing? They're coming up against a descending tops line here, mostly just simply coming off of the May 1st area. That is acting as resistance. You want to watch how the market behaves. If we take a look at the S&P 500, you can see it's just slightly above that area, but that area is acting as a resistance zone. If you take a look at the Dow, we'll pull the Dow up here next. And you can see the Dow really doing the same thing. So you got all the same charting patterns. Your lines have been drawn in the sand. Just pay attention to your lines, folks. Thanks for being here. Have a great weekend, folks. I'll look forward to seeing you 9:06 a.m. sharp come Monday morning. Take care. Bye-bye now.